Very good evening, everyone. How are you all? I hope everyone is fine and everyone is preparing very well for the coming exam. Correct? Now, what is the why we are here today? We are here to discuss the CA final RTP paper for May 2022 attempt. Have you gone through the RTP? I hope you might have gone through the RTP. Whatever questions is included in the RTP this time are very, I will say, not complicate. No questions are complicate, but one thing we can say that whatever question they have given, all are new questions. Most of the questions are new, but not complicate. But then also from examination point of view, we need to have a discussion on RTP, because sometimes what happen, a direct question may come in exam from RTP only. Correct? Got it? Is the voice is audible? First, please check whatever the voice. Are you getting the clear voice? Any, are you getting a clear voice? Voice is audible? Can you respond, everyone? Everyone? Okay. Then voice is audible. Okay. Now we'll have a discussion on RTP. So we'll have a 1 hour discussion for 2 days. Today we'll have 1 hour discussion. Then tomorrow we'll have 1 hour discussion. If suppose RTP is covered before the time period whatever I have allotted, then we can discuss some important question also from examination point of view. Okay, is it okay, everyone? So can we start? The first question of RTP is from conceptual framework for financial reporting. I hope you know that this chapter was is totally revised now. Initially it was framework for the preparation and presentation of financial statement. Now it become conceptual framework for financial reporting under Ind accounting standard. Correct? Yes, sir. So conceptual framework. I hope already I have uploaded an amendment video on this lecture and you have gone through that. Have you gone through the amendment lecture for this chapter? Can you respond? Already the video has been uploaded in YouTube, but have you gone through that video? Let us read the question. It's very simple. Even though you apply common sense, you can give the answer. Correct, because this conceptual framework, from the word it is understood, it is nothing but a basic concept relating to asset, liability, equity, income, and expense, and how we report under Ind AS. Correct? Yes, sir. Let us read the question. Defense Innovator Limited is a public sector undertaking and is engaged in the construction of warship and submarines. So there is one company, Defense Innovator Limited, which is engaged in the construction of certain equipment. XYZ Private Limited approached Defense Innovator Limited for construction of specially designed ships for it, which will be used by XYZ Private Limited for transportation of specific goods. Means XYZ Limited will be a customer for Defense Innovator and they have asked them to design a ship for them. The offer was accepted by Defense Innovator Limited and both the company entered into an agreement for the construction and delivery of three specially designed ships on fixed price basis with a variable component in respect of certain items. Means the price will be fixed plus some variable component in respect to certain item. Okay. Based base and depot spares for all three ships shall be procured, means shall be purchased by Defense Innovator Limited and will be paid on the cost of the item with certain percentage. means the whatever spare part will be required for these three ships will be purchased by Defense Innovator Limited and will be paid on the cost of the item with certain percentage. Okay, sir. The contract states that certain equipment out of variable cost item will be supplied by XYZ Private Limited at free of cost. So there will be certain equipment which will be supplied free of cost for installation on board of ship. So contract state that certain equipment out of variable cost item will be supplied by XYZ Private Limited, will be supplied by the customer, will be supplied by the customer XYZ Private Limited at free of cost for installation on board of ship. Okay. It is therefore to be noted that some equipment are procured by Defense Innovator Limited in the presence of XYZ Private Limited representative for technical scrutiny as well as negotiating the prices. Okay, sir. So some equipment are purchased by Defense Innovator Limited in the presence of XYZ Private Limited representative for the technical scrutiny as well as negotiating the prices. Correct? Means the representative of customer will be also with the supplier for the technical scrutiny and negotiating the prices. The vendors of this equipment are paid by Defense Innovator Limited. So who will pay the price? Defense means Defense Innovator Limited will pay the price. The cost of the equipment along with the cost of installation and the profit thereon is claimed and reimbursed by XYZ Private Limited to the Defense Innovator Limited. So the cost of equipment along with the cost of installation and the profit thereon is claimed and reimbursed by XYZ Private Limited to Defense Innovator Limited. Okay, sir. Yes, sir. We can understand. There are certain other equipment for which orders are directly placed and also paid by XYZ Private Limited. But there are certain equipment for which orders are placed directly and also paid directly by XYZ Private Limited. Okay, sir. These equipment are known as buyer furnished equipment. So the name of this equipment is buyer furnished equipment and are delivered to the company free of cost for installing in the ship. Means it is given by customer to the supplier. Means it is given by the XYZ Limited to which company? To Defense Innovator Limited at free of cost for installing in the ship. The labor cost of installation of these are already included in the price component of the contract. Means the installation, whatever installation cost of installation is already included in the contract price. Okay, sir. This buyer furnished equipment are returned to the buyer after completion of the ship. So whatever buyer furnished equipment which will be used in the installation will be returned to the customer. Customer means what? It will be returned to the XYZ Limited after completion of the ship. Okay, sir. The period required for the construction of one ship was approximately 4 years. Whether cost of buyer furnished equipment supplied by XYZ Private Limited to the Defense Innovator Limited for installing the same in the ship can be considered as inventory by Defense Innovator Limited, and then on the delivery of ship will be recognized revenue in the books of account. Elaborate. Means you can see the entire question is related to this para. The entire question is related to this para. Means whatever has been given before this para is only a story has been given. Are you able to understand? Means the question is not related to previous para. The question is related to only point number 2. There are certain other equipment for which orders are directly placed and also paid by XYZ Limited. Means some equipment will be purchased by the XYZ Limited and will be transferred to a defense for installation in the ship. Correct. Now the question is that what the question they about whether cost of this equipment supplied by XYZ Limited to Defense Innovator for installing the same in the ship can be considered as inventory. So to become inventory is to meet the definition of asset as per conceptual framework. So what is the meaning of asset as per the conceptual framework? So what is the meaning of an asset? So can I say an asset means if you have gone through conceptual framework, an asset is a present economic resource resulting from past event. So any present economic resource controlled by the entity resulting from past event. So an asset is a present economic resource. An asset is a present economic resource controlled by the entity resulting from past event. So what is the meaning of economic resource? Economic resource is a right. Economic resource is a right that has the potential to produce economic benefit. The economic resource is the right that has potential to produce economic benefit. Now the question is that, can you see, because from the question it is understood that this is supplied by XYZ Limited and the amount is also paid by what? XYZ Limited, and on completion of SIP this will be returned by Defense Innovation Limited to XYZ Limited. It will be returned once the installation has been completed. So can I say from this para we can understand that it is not under the control, it is not under the control of what? Supply. It is not under the control of which company? Defense Innovator Limited. Therefore, it will not be considered as an asset as well as inventory in the books of what? In the books of Defense Innovator Limited. Second question they have asked. Whether it will be included, means on delivery of the ship will be recognized as revenue in his books, means when on delivery of the ship will be recognized revenue. So of course can I say from the question it is understood that nothing has been missed. Can I say it is not included in the contract price. If you see, the labor cost of installation of these are already included in the price component, means the cost it has been supplied at free of cost. So this is not a part of contract revenue, therefore it will not be recognized revenue on delivery of ship. Understood? So neither it will be inventory. If it is not inventory, the question of revenue recognition will not arise. The question of revenue recognition is not arise, but the answer need to be given as per the conceptual framework. Now, if you give answer based on Ind AS 2 or Ind AS 1 and 5, so I hope you will not get marks because this question is related to conceptual framework. So how will understand this is a question related to conceptual framework? One point will come, sir, how will understand it is a question related to conceptual framework? Correct. Now that is a point. So what I want to say, whenever they question this, whenever the question is of this nature, whether it will be recognized as an inventory or revenue, so this all asset, income, expense, equity, liability has been defined under conceptual framework. So whenever a question related to definition of an asset, definition of income, then you have to give answer based on conceptual framework. Correct. Now I'm not saying the definition of inventory. Definition of inventory. Correct now. So of course can I say then after giving answer as per conceptual framework, you can also give as per Ind AS 2 and as per Ind AS 1 and 5 also. But this question you can see the heading is only conceptual framework. But when you read the question, you will not be able to understand whether you need to answer as per conceptual framework. Let us come to the solution given by institute. Suggested solution. If you see the solution, so let me come to the solution first. So this chapter is important. Why? Because this is a revised chapter for the first time applicable to this attempt. Correct now. You can see the answer. Yeah. You can see before any item can be recognized in inventory, it should meet a definition of asset as given in the conceptual framework for financial reporting under Ind AS issued by ICAI. So it means they have given answer by reference to conceptual framework, because in exam they will not give the heading that this question is from this chapter. The point is that how you will identify, you need to give an answer based on conceptual framework. So what I am saying, whenever they ask you whether it is an asset or whether it is a revenue, it means they have asked question related to conceptual framework, because asset is not defined under Ind AS. Correct? Now asset is defined only under which chapter? Conceptual framework chapter. Got it this point? Correct. Then they said an asset is a present economic resource controlled by the entity as a result of past event. An economic resource is a right that has potential to produce economic benefit. Then they have given the facts. Correct. Now on the basis of above, it can be concluded that the BEF cannot be considered as inventory or work in progress for Defense Innovator Limited. The BF cost cannot be considered as a part of sales value contract revenue to the Defense Innovator Limited. So both conclusion I hope you have understood. Can we come to the second question? Yes, sir. Got it. Second question. Second question is related to Ind AS 1. This question is for operating cycle, means the definition of current asset and current liability. Correct. An entity manufacture passenger vehicle. The time between purchasing of underlying raw material to manufacture the passenger vehicle and the date of entity completes the production and deliver to the customer is 11 months. Customers settle the dues after a period of 8 months from the date of sales. Means can I say operating cycle is 11 plus 8 means 19 month. Yes, sir. Will the inventory and the trade receivable be current in the nature? So can I say for inventory, inventory will be always current. Why? Because inventory as per the meaning of current asset is always held for sale. It is held for trading purpose. So any asset which are held for trading purpose will be always inventory. Correct now? Understood. So inventory will be always current, but doubt will come about trade receivable. So whether this trade receivable is realized within company's operating cycle. Can I say for that we need require more information? What is the due date of payment, but that information is not given. However, they said customers settle dues after a period of 8 months from the date of sale. From the date of sale. So from this we can conclude that it can be realized within operating cycle. It can be realized within operating cycle. Therefore, it is of current nature. Understood? Current in nature. Assuming that production time was 15 months and the time lag between the date of sale and collection for customer is 13 months, so it becomes 15 plus 13 means how many months? 28 months. Will the answer be different? Can I say answer remains same only because operating cycle now become 28 months and the customer can realize that is the trade receivable is collected or realized within what? Within company's operating cycle. So if it can be realized within company's operating cycle, it will be current in nature. Inventory will be always current in nature. Understood? Point number 2, have you understood? Let's see what the answer has been given. Let the answer. What is the answer given? You can see inventories and data need to be classified in accordance with the requirement of Ind AS 1, which provide that asset will be classified as current if the entity expect to realize the same or intend to sell or consume it in normal operating cycle. Correct? In the case the you can see operating cycle is 19 months, both inventory and data would be classified as current if the entity expect they have given if the entity expect to realize this asset in the normal operating cycle. Are you able to understand? But for inventory, I will say always it will be current because there is a condition number 3 for current asset that any asset which are held for trading purpose will be current. So inventory will be always current. Understood? Yes, sir. Point number B, what they have said, no, the answer will remain same as the classification of data inventory depend on the expectation of the entity to realize the same in the normal operating cycle. In case the operating cycle become 28 months, both inventory and data will be classified as current if the entity expect to realize the asset in the normal operating cycle. Correct? Understood? If suppose any additional information is required, some additional info is required will be required to made by the entity which provide whichever method of presentation means what they want to say ki if suppose just try to understand if the operating cycle is 28 months 28 months, correct, and is expected to be realized in 24 months. Are you able to understand? Any trade receivable is expected to be realized within 24 months. So Ind AS 1 require, and even though it is current asset, Ind AS 1 require additional information disclosed ki how much amount means out of this means how much amount is collected within 12 months and how much amount is collected after 12 months from reporting date. That additional information required as disclosure that is given. However, this should not be the part of the answer because they have not asked about this. Correct now. So you can ignore this para from examination point because they have asked only about a classification of asset as current and non-current. Understood? What they have given additional information required by Ind AS 1 will be required to made by an entity which provide whichever method of presentation is adopted, entity shall disclose the amount expected recovered or settled after more than 12 months for each asset liability line item that com that combines amount expected recovered or settled. No more than 12 months after reporting period and more than 12 months after reporting date. So for any current assets which are expected to realize within operating cycle means it can be more than 12 months. You need to disclose ki how much amount of receivable is expected to realize within 12 months, how much amount is expected to realize after 12 months from reporting date. Understood? Have you understood this point? Correct. Let us come to the next question. Then the next question is about applicability of Ind AS. For the first time, they have given any question on applicability of Ind AS in RTP. Correct? Till now, no question has been given on applicability of Ind AS in RTP. Correct? Can we start? Yes, sir. Fresh Vegetable Limited was incorporated on 2nd April. 2nd April. Now, of course, 2nd April to 2001. You can't say 2001 because Ind AS is applicable from which year? From 2016. So you can say it is 2021. 2021 na? Yes, sir. under the provision of Companies Act 2013 to carry out a wholesale trading business in vegetable. As per the audited account of the financial year ended 31st March 2000, this should be 2017, correct? So as per the audited, 27, sorry, make it 27, or you can say 17 also. So as per the audited, or make it 2011, better, 2011 to this become 2017. As per the audited account of the financial year ended 31st March 2017, approved in its annual general meeting held on 31st August 2017, its net worth for the first time since incorporation exceed 250 crore. Exceed 250 crore. Correct? Understood? So now we know that any companies whose net worth is more than 250 crore, for them Ind AS is applicable. For them Ind AS is applicable. The financial statements since inception till financial year end 31st March 2016 were prepared in accordance with the company's accounting standard rule 2006. Means up to 31st March 2016 they have applied accounting standard. It has been advised that henceforth it should prepare its financial statement in accordance with company's Indian accounting standard rule 2015. Understood? From the next year they will apply which Ind AS which has been notified under company's Indian accounting standard rules 2015. The following additional information is provided by the company. FBL has in the financial year 2012, it should be 2012-2013, entered into 60/40 partnership with the Logistic Limited and incorporated a partnership firm, Vegetable Logistic Association, Vegetable uh, Logistic Association, to carry on logistic business of vegetable from farm market. What they are saying? The following information is provided by the company. FBL has in the financial year 2012-13 entered into 60/40 partnership with Logistic Limited. With Logistic Limited means there are two partner. One is FBL and one is Logistic Limited. 60/40 partnership and incorporated a company known as partnership firm. Incorporated a partnership firm whose name is Vegetable Logistic Association to carry on logistic business of vegetable from farm to farm. Okay. FBL also has an associate company, Social Welfare Limited, that was incorporated in July 2015 as a charitable organization and recognized under Section 8 of the Companies 2013. So, in the year 2015, they have also one associate. Associate name is Social Welfare Limited. Social Welfare Limited has been the associate company of FBL since its incorporation. It is a charitable organization. Now we all know that for charitable organization also India is applicable if it comes under the prescribed limit. I hope you understand it. So we all know that whenever a company, for a company India is applicable, so for their parent, associate, joint venture and subsidiary also India is applicable from the same date. Now the question is that this partnership firm Vegetable Logistic Limited, whether it is joint venture. Now it means any partnership firm means we need to apply India's triple one. India's triple one means what? Joint arrangement. Now as per India's triple one, it can be either joint venture or joint operation. Now if it is joint operation, then can you say for them India's is not applicable. If it is joint venture of FBL, then for them India's is applicable. Means as per the limit specified in the roadmap of applicability to India, it is given that if a company for which India is applicable, so for their associate, for their joint venture, for their subsidiaries, for their parent, will for them also Ind AS will be applicable from that date. But it is given joint venture, not joint operation. So can you see if this partnership firm is joint operation as per Ind AS triple one, then for them what is not applicable? Ind AS is not applicable. Now it is understood. Just try to understand. Means it is not clear whether it is joint operation, joint venture. We need to understand. We need to make two assumptions. If it is joint operation, then Ind AS is not applicable. If it is joint venture, then Ind AS will be applicable. Understood? Now, I hope you know what is joint operation and joint venture. Joint operation means where the parties to the joint arrangement have a right to asset and obligation for the liability related to joint arrangement. And when I'm saying joint venture, the joint venture, the parties will have a right to the net asset of the arrangement. Understood? This is the difference between joint operation and joint venture. Correct? So I hope you have understood that it depends upon the assumption whether it is a joint operation or joint venture. But can you see any associate, whether it is a charitable organization, for them what will be applicable? India's will be applicable. Means for charitable organization, no exemption has been given under India's. Examine the applicability of India's for VLA and SWL. Understood? I hope you understood. Let's see what the answer has been given. Have you understood this point? Bolo. Have you understood this point? What they have given, check करेंगे. Currently, India is applicable to the following company except that for the companies other than bank, insurance company, and what NBFCs. Correct now. For them, other rules are applicable. However, for banking and insurance company, right now, India's is not applicable. For them, some time limit has been extended. Correct? Yes, sir. All companies which are listed are in the process of listing without any limit. Unlisted company having a net worth of 250 crore or more but less than 500 crore means this is applicable till now. But means as of now, whether it is a company or it is an NBFC, the rules remain same because now we are into which year? In 2022, correct now. So I hope you understand all companies which are in the listed company, for them India's will be applicable. All companies which are unlisted having a net worth of 250 crore or more but less than 500 crore, for them also what will be applicable? India's will be applicable. Holding subsidiaries, associate and joint venture above, India's will be applicable. Of above means of point number A and point number B. Means any holding subsidiary, associate, joint venture, a banking company, insurance company, right now the India's is not applicable. Understood? Yes, sir. But then this point you can read this point. Correct. Now applicability of India's on VLA. VLA means partnership firm. Joint arrangement can be either joint operation or joint venture. However, for the purpose of identifying the applicability of India's, Act defines joint venture. Joint venture. So what is the meaning of joint venture is also given in Companies Act. Correct now. As per Companies Act, the expression joint venture means joint arrangement whereby the party that have joint control of the arrangement have a right to the net asset of the arrangement. Same meaning is given under India's triple one. Means here joint venture is what? Not a joint operation. Understood? Yes, sir. Accordingly, if the entity is classified joint operation and not joint venture, then India's would not be applicable to such entity. Correct? Alternatively, if parties conclude that they have joint control of the arrangement and have a right to the net asset of the arrangement relating to partnership firm, then this would be a joint venture. In such case, India's would be applicable to them. So because question is silent regarding whether it is a joint operation or joint venture, it means you need to write down both assumptions. Have you understood this point? Yes, sir. Correct? Yes, sir. Coming to applicability of India's on SWL, so of course it is an associate company and any associate company India's will be applicable even though irrespective of the fact that it has been incorporated as a charitable organization. Got it? Very simple. Yes, sir. This also we have understood. Coming to the next question. Coming to next question, India's 1.5. This question, what happened? I think the question when they have drafted, they have not given the amount, means they forget to give amount in the question. So I will say there is a mistake in the question. The from solution will try to find out what amount is missing in the questions. Correct? Now, of course, in exam, if the same questions come, they will give the amount. Nothing to worry about that. On 1st April 2001, S Limited entered into contract with Corporation Limited to construct heavy duty equipment for a promised consideration of rupees. You can see of rupees. Rupees is missing. With a bonus of rupees, that rupees is also missing. If the equipment is completed within 24 months, means there is a fixed consideration and a variable consideration. Variable consideration is based on what? Some completion date, means the bonus will be received if the equipment is completed within 24 months. At the inception of contract, S Limited correctly account for the promised bundle of goods and services as a single performance obligation India as per India's 1.5. So they have given that there is a single performance obligation. Yes, sir. Correct? Got it? Yes, sir. At the inception of the contract, the company expect the cost to be the rupees, expect the cost to be the rupees, and conclude that it is highly probable a significant reversal of the amount of cumulative revenue recognized will occur Okay, completion of heavy duty equipment is highly susceptible to the factor outside of company's influence, mainly due to the difficulty with the supply component. Means what they are saying, that they will not be able to complete the equipment within the time limit. Therefore, can I say variable consideration will not be included in the contract price? Correct? Yes, sir. Means it will not be included in transaction price. At 31st March 2002, S Limited has satisfied 65% of performance obligation on the basis of cost incurred to the date, and conclude that variable consideration is still considered in is still constrained in accordance with India's 115. Still now there is some constraint on variable consideration, therefore it will not be considered in recognition of revenue. However, on 4 June 2002, something happened. The contract is modified. The contract is modified. So this is a question with modification also, with the result that fixed consideration and expected cost increased by 1,50,000, 80,000 respectively. So fixed consideration increased, so it is a modification. Now whenever there is a modification, there are 2 points: whether modification will be accounted as a separate contract, or modification will not be accounted as separate contract. So when modification will be accounted as separate contract, when two conditions satisfied, that the price, there is an increase in scope of the contract, means there is an increase in scope by addition of some additional goods and services which are distinct, and the price has been increased, which commensurate with the standalone selling price of additional goods and services. If these two conditions are satisfied, then modification will be considered as a separate contract. Otherwise, modification will not be a separate contract. Understood? So whenever modification is not a separate contract, then some adjustment will be done in existing accounting. Correct? Yes, sir. We'll come to that point. The time allowable for achieving the bonus is extended by 6 months, with the result that S Limited conclude that now it is highly probable that bonus will be achieved, and the contract remain a single performance obligation. So due to this modification, now it can be concluded that bonus can be achieved. S Limited want your opinion on accounting treatment of the contract with Corporation Limited in the light of India's 15 for the year 2001, 2002 and 2002, 2003. But for this we require amount. Amount is not given in the question. I will say it is missing. By mistake it is missed. Means in exam question, of course, the amount will be given. So we need to understand what is the amount given from the solution. You can see they have given transaction price 20 lakh, expected cost 11 lakh, and expected cost 11 lakh. This was missing. And at contract inception, S Limited exclude a bonus of 2,50,000. Means what is the fixed price, fixed consideration? It is 20 lakh. This was missing. The variable consideration bonus, the amount was 2,50,000, and the expected cost was not given, 11 lakh. And cost incurred till now, that is also not given. Cost incurred till now is 7,15,000. So cost incurred till now is how much? 7,15,000. 7,15,000. Then the fixed consideration was increased by 1,50,000 in the next year modification, and the expected cost was increased by 80,000. Correct? Means for the first year 2001, 2002, will apply this information. So in the year 2002, the variable consideration, means bonus, was supposed, means as per the information given the question, it was understood that that bonus will not be included in the transaction price, because there is a higher probability that it will not be achieved. Correct? Yes, I mean there is some constraint in variable consideration. Therefore, can I say transaction price will be equal to 20 lakh? Will be equal to 20 lakh. Correct. Now because there is single performance obligation, and from the question it is understood that it will be recognized with the revenue recognized over the period of time. Over the period of time means we need to find out percentage of completion. The percentage of work completion will be based on cost to cost method. What is the estimated cost? 11 lakh. And how much cost incurred? 7,15,000. So 7,15,000 divided by 11 lakh. 11 lakh. How much? It becomes 7,15,000 divided by 11 lakh. That is 65% completed. So can I say for the first year we recognize 20 lakh. 20 lakh ka 65%. How much? Into 65%. So 20 lakh into 65% means 13 lakh will be recognized as revenue. Correct? Less contract cost incurred is 7,15,000. 7,15,000. The minus 7,15,000. It means what is the profit? 13 lakh minus 7 lakh 15,000. Profit will be 5 lakh 85,000. Have you understood this point? For the first year. For the first year, have you understood? Bolo. Yes, unlisted company with more than 500 crore net worth is for them also India is applicable. So just try to understand what they are saying in the solution. As of now, any unlisted company having a net worth of 250 crore more. So any company whose net worth is more than 250 crore, so can I say automatically any just try to understand. Unlisted company having a net worth of 250 crore or more, so automatically in this what is included? This is unlisted company. Sorry, for unlisted company, just try to understand. For unlisted company, what they are saying? Unlisted company with more than 500 net worth. Yes, yes. No, no, that was what they are saying. Now all companies which are listed, all companies which are listed, correct. Now for them, India is applicable. All companies which are listed, for them, India is applicable. But for unlisted company, if the net worth, if the net worth is more than 250 crore, 250 crore or more than 250 crore but less than, what is your doubt? What is your doubt? 1 minute. Now, what was the roadmap? Let us come to this. Let us remove the doubt. So, for companies other than bank, what is given? Any company listed or in the process of listed in stock exchange in India having a net worth of 500 crore or more, for them though India's will be applicable from the beginning. But in the first, in the initially unlisted company having net worth of more than 500 crore, for them only India's was applicable. Correct. Then in second phase, then the next phase, all companies which are listed, for them India's was applicable. Correct. But for unlisted company having a net worth of 250 crore or more, अच्छा. Unlisted company having a net worth of 250 crore more, for them India's was applicable. Correct. Means something is written wrong or what? 1 minute. Yeah. Unlisted company having a net worth of 250 crore or more. I think this is not correct. Okay, now unlisted company having a net worth of 250 crore or more, but less than, this is not correct. 250 crore more, for them India's will be applicable as of now. Now correct? Now okay? I have not seen that point. Now okay? Bolo. Yes, sir. Now coming to the next point. Have you understood this point till now? Bol. So you can see they have also calculated a profit of 5,85,000. So 5,85,000 profit is calculated. Now coming to the second year. Second year there was a modification. So whenever there is a modification, we need to just find out whether the modification will be accounted as separate contract or modification will not be accounted as separate contract. So it is understood from the question given that modification will not be accounted as separate contract. Now in this case there are 2 points. The remaining goods and services are distinct or remaining goods and services are not distinct. So can I say in this case remaining goods and services not distinct? So whenever remaining goods and services not distinct, then the modification will be accounted as if it were a part of an existing contract, and revenue will be recognized on a cumulative catch-up basis. Cumulative catch-up basis. You remember that point? Revenue will be recognized on a cumulative catch-up basis. You remember that point? So in this case, can I say for 2023, correct? Now it is given that now bonus will be achieved as per the information given the question. So now transaction price will be 20 lakh plus 2 lakh 50,000, correct? And there was an increase in transaction price, means fixed consideration become 20 lakh plus 1 lakh 50,000. 20 plus 1.5 means 21 lakh. It will be 21 lakh 50,000, correct? 21 lakh 50,000, because there is a modification, and the bonus will be how much? 2 lakh 50,000. And expected contract cost has been also increased. So initially it was how much expected contract cost? It was 11 lakh, increased by 11 lakh, increased by 80,000. Actual cost incurred is 7 lakh 15,000. 7 lakh 15,000. So now we'll find out 7 lakh 15,000 divided by 11 lakh 80,000. So 7 lakh 15,000 divided by 11 lakh 80,000. It become how much? 60 point. Now it becomes 60 point. How much percentage? 60.59 percentage. So now the revenue recognized will be how much? It will be 21 lakh 50,000 plus 2 lakh 50,000 into, means 24 lakh into 60.59%. So it become how much? 60.60. You can say they have taken 60.60. So it is coming how much? Let us take 60.60 only. So into 60.60%, how much it is coming? It is coming 14 lakh 54,400. But out of this, how much is already recognized? Already we have recognized how much in the first year? We have recognized 13 lakh. So 13 lakh is already recognized. So how much will we recognize in the second year? Minus 13 lakh. So that will be equal to how much? How much will be recognized in the second year? 1 lakh. 1 lakh means 14 lakh 54,400 minus 13 lakh. It will be 1 lakh 54,400. Understood? So this much revenue will be recognized in the second year. Understood? That is only given. You can say S Limited has satisfied 60.60 of its performance obligation. The entity recognized additional revenue of itna, correct, at the date of modification as a cumulative catch-up adjustment. Understood the word cumulative catch-up adjustment? Have you understood this point? Yes, sir. I hope the question was very simple, but what happened in the question, the amount was not given. So of course in exam amount will be given. You can write down these are the amount which we are missing: 20 lakh, 11 lakh, and the cost incurred 7 lakh 15,000. This was not given. Once given, this question become very simple. Got it? Yes, sir. Coming to next question, Ind AS 37 question. Let's see what they have given. XYZ Limited offer a 6-month warranty on a small to medium size equipment which can be put to use by the customer with no installation support. So 6-month warranty was given. So under warranty means it will be a question of Ind AS 37. The warranty comes with the equipment and the customer cannot purchase it separately. So customer cannot purchase this warranty separately. Understood? It cannot be purchased. The customer cannot purchase this warranty separately. So warranty comes with the equipment. So if the customer can purchase this warranty separately, so it can become a separate performance obligation. Then it will be accounted as per Ind AS 115. Already we have discussed this point under Ind AS 115 also. This equipment is typically sold at a gross margin of 40%. The equipment is typically sold at a gross margin of 40%. Means GP is 40%. XYZ Limited has made a provision of rupees 30,000 during the year ended 31st March 2002, which is approximately 1% of gross margin on the sale of this equipment. Means what they say, provision is equal to 1% of gross margin, 1% of gross margin, and gross margin is equal to 40% of sale, 40% of sale. Based on the past experience, it is expected that 1% of equipment sold has been returned as faulty within the warranty period. So based on past experience, it is now have been informed that 1% of equipment sold have been returned as a faulty within warranty period. So if it will return, so can you say we need to create a provision not on gross margin, we should create a provision on sales amount. So as per the past experience, it is expected that 1% of equipment sold will be returned. Faulty equipment returned to XYZ Limited during the warranty period are scrapped and the sale value is fully refunded to the customer. Means can I say, as per the past experience, provision should be 1% of sales amount, but they have created based on 1% of gross margin. Assuming that sales occurred evenly during the year, how should XYZ Limited evaluate and whether any additional warranty provision is required on equipment sold in the past as at 31st March 2002? Had the warranty period been 2 years instead of 6 months, what additional criteria would XYZ need to consider? So first 6-month warranty, second they have said if it is 2-year warranty, then what adjustment is required? So first they have given, just try to understand, they have given has made a provision of 30,000. So they have made a provision of 30,000. So 30,000 divided by 1% means we can calculate gross margin. So gross margin is how much? 30,000 divided by 1% means 30 lakh. 30 lakh is the gross margin, correct? Now divided by what? 40%. 40% means sales is equal to what? 75 lakh. 75 lakh. Now they are saying sale is evenly spread. So it is 6-month warranty means can I say the sales which has been done in the last 6 months for that warranty period is not expired. Sales which has been done in the first 6 months for that warranty period is already expired. So we need to create provision for those sales for which warranty period is not expired. Correct? So can I say 75 will do divide by 2. Divide by 2 means for last 6 months it become how much? 75 divide by 2. It become 37 lakh 50,000. Correct. Now, provision required based on our past experience, it should be 1% of this 1% of sales will be how much? It is 37,500. But how much provision already created? 30,000. So how much additional provision required? 7,500. Correct. Because it is 6 months. So can I say 6 months means time value of money is not better here. Therefore discounting is not required. Means it will be undiscounted amount. Undiscounted amount. Have you understood? Correct. Now, I think 6 months you have understood. Coming to 2 year, if it is 2-year warranty, so can I say the provision required will be now 1% of entire revenue. Entire revenue, because can I say warranty period for the entire sale has not been expired. So now it will be 1% of 75 lakh means 75,000. Provision already created 30,000. So how much provision will be required? To 75 minus 30 is equal to what? 45,000. 45,000, this much provision required, and because it is 2 year means can I say it is time value of money will matter here, therefore can I say it will be also discounted. A discounted amount will be considered for the amount of provision. Have you understood this point? I hope you have understood. Very simple question. Have a similar question have already given in the previous RTP. Have you understood this? Let's see what the answer has been given. You can see this is given calculation of additional warranty provision. You can read, you can see 40% 30 lakh, 100% 75 lakh, 37 lakh, 1% 37,500, therefore 7,500, 6 months, no discounting required. Period of 2 years, so you can see it is 30 lakh, 75 lakh, 75,000, 45,000. Further discounting of provision would be required. Got it? Have you understood this point? Simple? Yes, sir. Coming to the next question. Point number 6. Ind AS 32. On 1st April 2001, entity X issued 10% convertible debenture with a face value of 1000 maturing on 31st March 2011. With a face value of 1000, 10% convertible debenture. The debentures is convertible into ordinary shares of entity X at a conversion price of 50 per share. The debentures are convertible into ordinary shares of NTDX at a conversion price of 50 per share. At a conversion price of 50 per share. Okay. Means can I say if the 1000 is this divided by 50, so 1000 divided by 50 means how many shares? 20 shares will be allotted. Interest payable yearly in cash on 1st April 2002. On 1st April 2002 next year, to induce the holder to convert a convertible debenture promptly, entity X reduced the conversion price to 40 if the debentures is converted before 1st June 2002. Before 1st June 2002, that is within 60 days, means now the conversion price will be changed from 50 to 40. If the conversion price will be changed from 50 to 40, so it will become 25. The market price of entity X ordinary shares on the date the terms are amended is 80 per share. How will the revised terms be accounted? How will be the revised terms be accounted? So can I say you can see the additional number of shares due to this amendment is 5 shares. Understood? 5 shares. Are you able to understand? So additional number of shares will be 5 shares. Correct? And what is the market price into 80? So 5 into 80 how much? 5 into 80 is equal to what? 400. This 400 will be recognized in PL. Correct? So whatever additional equity shares you are issuing due to amendment, that will be recognized in PL. That will be recognized in PL. This is a simple question. I hope no doubt in this. Let's see what is the solution given. You can see number of ordinary shares to be issued to debenture holders under amended terms. 1000 divided by 40 means 25 shares. Number of ordinary shares to be issued to the debenture holders under original terms 1000 divided by 50, 20 shares. The number of additional shares to be issued to debenture holders under amended terms 5 shares. Value of additional shares upon conversion to be recognized in PL as loss will be 400. 400 means 5 into 80. So whatever additional shares you are issuing, that will be considered as what? Loss, and that loss will be charged to PL. That loss will be charged to PL. Got it? Have you understood this point? Simple. Correct. This is also question from ICAI study material only. Means this is not a new question. This is a question from ICAI study material only. Correct. Understood this? Yes, sir. Coming to the next question. Point number 7. This is a good question. I will say conceptual question and a new question also. X Limited commenced the construction of plant on 1st September 2001. Estimated to cost 10 crore. For this purpose, X has not raised any specific borrowing. Rather, it intends to use general borrowing, which have a weighted average cost of 11%. So they have given capitalization rate. Total borrowing cost incurred during the period from 1st September to 31st March is 0.5 crore. You can see the other relevant details are as follow. Month, cost to construction accrued. So they have given cost to construction accrued and cash outflow paid in advance at the start of each month. So even though it is accrued, how much advance has been paid, that is given. Yes, sir. Based on the above information, discuss the treatment of borrowing costs as per the cash outflow basis and as per accrual basis, and also suggest the appropriate amount of interest that should be capitalized to the cost of the plant in the financial statement for the year ended 31st March 2020. Now the first question arises, we should calculate borrowing cost to be capitalized based on accrual cost or based on cash outflow. So of course can I say your loan amount will be used only when you pay the expenditure. It means can I say borrowing cost should be calculated based on cash outflow, not based on accrued cost. Correct? Means this information is bakwas information. We need to find out the borrowing cost to be capitalized based on cash outflow, not based on the cost of construction accrued. But in this question, what they have asked, discuss the treatment of borrowing cost as per cash outflow basis and as per accrual basis. Means you need to first do calculation based on that, then appropriate accounting will be based on cash outflow, that you need to write down as per the India's 23 requirement. Correct? Understood? Correct. So of course you can do that. It is not complicated. Let us come to the solution. You can see. So you can see cost of construction accrued. Then they have calculated average expenditure. So of course capitalization rate will be applied on average expenditure to 1.5 into 7 by 12 because September, October, November, December, January, February, March, 7 months. October it will be 6 by 12, November it will be 5 by 12, December it will be 4 by 12, January it will be 3 by 12, then Feb it will be 2 by 12, March it will be 1 by 12. This become the average expenditure. On average expenditure you apply 11%. You can see 2.74 into 11%, it becomes 0.3 crore based on accrual cost. Based on accrual cost. Now based on what cash outflow, the cash outflow paid in advance at the start of each month, you can see 3. So average capital expenditure will be what? 7 months, 6 months, 5 months, 5 months, then 4 months it is 0, 3 months it will be then 2 months, 1 month, and it become what? Average expenditure 4.02. So you can see 4.02 into 11% is 0.44 crore. First we have calculated borrowing cost based on both methods. Then you have to give that as per India's 23. Then what they have given, check karo. Expenditure on qualifying asset include only those expenditure that have resulted in payment of cash or transfer of other asset or assumption of interest bearing liability. Means you should calculate borrowing costs only on those expenditures that have resulted from the payment of cash. Correct? Yes, sir. Expenditure are reduced by, then expenditure can be reduced by any progress payment received, any grant received in connection with the asset. Means you have received any grant, so of course on the amount whatever you have received, that is not your outflow, so on that borrowing cost will not be capitalized. That is a common sense point. Correct? Now, so what they said, where the cash has been paid out of the corresponding cost, where the cash has been paid but the corresponding cost has not yet accrued, interest become payable on payment of cash. Therefore, amounts so paid should be considered for determining the amount of interest eligible for capitalization, subject to the fulfillment of other conditions prescribed under India 23. Accordingly, in the present case, the interest should be computed on the basis of cash flow rather than on the basis of cost accrued. Therefore, the amount of interest capitalized will be 0.44. However, we know that the amount to be capitalized should not exceed the actual borrowing cost. So in this question, it is given the actual borrowing cost is 0.5 and the borrowing cost to be capitalized 0.44. Therefore, this para is also satisfied. Means any extra amount of borrowing cost means 0.5 crore minus 0.4044 crore. This difference will be charged to profit and loss account as an expense. Understood? Have you understood this point? Bull. This also you have understood. Then coming to the next case. Ind AS 116. This question is related to whether contract contain a lease or not. Means you need to apply the meaning of lease. Means all the conditions need to be satisfied as per the lease contract. Correct now. So what they have said, case 1, scenario 1. The last mile is a dedicated cable that connect entity wise network with the end customer device. The use of this cable is at the discretion of the customer. Entity Y decide the location of endpoint and has the right to replace the line dedicated cable. However, it is not practical to replace the line since the replacement would require additional cost to be incurred without any corresponding benefit. Whether the arrangement would be within the scope of India's 116? Yes, because can I say in this case, the supplier means the supplier does not have substantive right to substitute the identified asset. So of course, in this case, the identified asset is the last mile cable, and can I say the supplier does not have substantive right to substitute such asset. Correct? Means there is uh, when it will be substantive right when the supplier does not have practical ability to substitute the asset and they will not derive any economic benefit from the substitution, then it can be considered as yes, it is an identified asset from which entire benefit will derive by whom? The customer only. Therefore, this contract contain a lease. Understood? Yes, sir. Scenario 2. If it is practical for the entity Y to replace the line and the entity Y would benefit from the replacement, then it means the supplier has a substantive right to substitute the asset. Therefore, this contract will not contain a lease. Understood? Yes, sir. Case 2. Customer X enter into 10-year contract with a utility company entity Y for the right to use three specified physically distinct fiber with a larger cable connecting Mumbai to Delhi. Entity Y for the right to use three specified physically distinct fiber with a larger cable connecting. Means there was a larger cable connecting, but they have a right to use three specified physically distinct fiber. Customer make the decision about the use of the fiber by connecting each end of the fiber to the electronic equipment. Entity Y own extra fiber but can substitute those for customer fiber only for the reason of repair and maintenance or malfunction. Correct? But means this is only this is not a substantive substitution right. The useful life of the fiber is 15 years whether the arrangement is covered under India's 116. So of course in this case also arrangement will contain a lease contract. Why? Because can I say in this case also supplier does not have substantive substitution right to replace the asset. And can I say it is a physically distinct asset? It is understood. It is a physically distinct asset. So it is an identified asset. It is an identified asset. Therefore, it will contain a lease. Correct? Yes, sir. And it is also given that they have a right to direct the use. This is also important point. The customer has a right to use. So they have a right to direct the use, right to direct the use and obtain substantially all the economic benefit from the use of such asset. Got it? Correct. Yes, sir. Case 3. Customer X enter into 10-year contract with entity Y for the right to use specified amount of capacity within a cable connecting Mumbai to Delhi. Specified amount of capacity. Specified amount of capacity. The specified amount is equivalent to customer X having the use of the full capacity of three fiber strand within the cable. The cable contain multiple fiber with similar capacity. Entity Y make decision about the transmission of data. So entity Y make decision about the transmission of data. Entity Y light the fiber make decision about which fiber are used to transmit the customer traffic. The useful life of the fiber is 15 years. Whether this arrangement is covered under India's 116. Now, even though from this it is understood, this is not a physical distinct asset. So, a capacity of an asset can be considered as physically distinct if 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 it substantially means if the customer is able to derive substantially all the economic benefit of that asset. Correct now. So now from the question it is not understood. I think so. Whether the it is giving a substantial amount of benefit to the customer or not. Correct now. But it is not a physically distinct asset. Let's see what the answer has been given. The specified amount is equivalent to customer X having using the full capacity of the three fiber standard within the cable. So full capacity of three fiber within the cable. So I think you need to give a judgmental answer. Let's see what the answer has been given. Check करेंगे. Yes, sir. So you can see in this question they have written the full description about the lease. What is lease? Uh, what is the lease and when it will is when the lease will contain a when the contract will contain a lease. A contract is a lease if the contract convey right to control the use of an identified asset for a period of time in exchange of consideration. This then they have given that the two assets where the contract convey right to control the use of identified asset. The customer has both the condition to be satisfied: the right to obtain substantially all the economic benefit and right to direct the use of identified asset. Correct now. This you can write down. Correct. Then a supplier right to substitute an asset is substantive only if the following conditions are satisfied. The supplier has the practical ability to substitute the asset. The supplier would benefit economically from the exercise of the right to substitute the asset. Then they have written entire thing. I don't know whether you should write down this much or not. You should directly come to case one, because of course in exam you will not get so much time to write down so many things. Correct now. So if you write down the definition and the two conditions, and then you can write down that yes, the supplier must not have substantive right to substitute the asset, then the contract will contain a lease. Correct now. This much if you write, you will get marks. Then you can come to the fact. Scenario 1, you can see the arrangement will be within the scope of India's 116 because there is no substantive substitution right with entity Y. Scenario 2, of course, it is understood from the question that entity Y has the practical ability to replace, therefore, it is not within the scope of India's 116. Case 2, the fiber are specified in the contract and are physically distinct. Hence, in accordance with the said three fibers are identified asset, then they have given that yes, the customer X has the right to control the use of identified asset for 10 years because the right to obtain something all the economic benefit and the right to direct the use. Thus, the arrangement is within the scope of India's 116. What about case 3? Case 3 में doubt आया. Let's read what they have given. Paragraph specific provided capacity or other portion of an asset that is not physically distinct. We have understood from the question that it is not physically distinct. Correct? Is not an identified asset unless it represents substantially all the capacity of the asset and thereby provide a customer with the right to obtain substantially all the economic benefit from the use of the asset. This also we have said, but it was not clear from the question. In the given case, the capacity portion that will be provided to customer X is not physically distinct from the remaining capacity of cable and does not represent, and is given does not represent substantially all of the capacity of the cable, thus it is not an identifier set. So they have assumed that it does not represent all, it does not represent substantially all of the capacity of the cable. Correct. So means they have taken one assumption from the question. I think it was not clear. Further, entity Y makes all decision about half. From this point we can say that yes, that right to direct the use is not with the customer. Therefore, this contract does not contain lease. Further, entity Y makes all decision about a transmission of data, etc., etc. This contract does not contain lease and therefore not within the scope of Ind AS 116. Understood? Have you understood this point? I will say whenever there is a doubt to give both assumptions, keep the capacity, means if the portion of capacity represents substantially all of the capacity of the asset, or if it does not represent all of the capacity of the asset. So in both cases, this is the answer, this is the answer you can give whenever there is a doubt. Understood now? Got it? Yes, sir. Coming to the next question. Ind AS 103 question number 9. What is this question? Entity A acquire entity B. Entity A agree with the former shareholders of entity B to pay 900, this is PC, with an additional payment of 500 if the subsequent earning of the entity B reach a specified target in 3 years. The former shareholders also become employee. So the former shareholders also become employee. On the acquisition date, the fair value of net asset of the entity B amount to rupees 850 and the fair value of additional payment is estimated to be 200. Additional payment fair value means this is a contingent consideration. With an additional payment is understood as a contingent consideration, and we know that the fair value of contingent consideration on the date of acquisition will be a part of PC. So the fair value of additional payment is estimated 200. At an acquisition date, outflow of additional payment is not probable. They have said it is not probable. Therefore, even though it is not probable, then also can I say it will be included in PC at fair value of contingent consideration on the date of acquisition. Over the next 3 years, the cumulative earning of entity B before considering the effect of additional payment amount to rupees 1050. So over the next 3 years, the cumulative earning is 1050. At the end of year 3, entity A pays 500 as the condition was satisfied. State the impact of financial position and result of classifying the payment as remuneration and contingent consideration. Oh ho ho. Classifying the payment. Now, whenever there is a contingent payment and if the contingent payment is to the employee shareholders, now one doubt will come whether it is a part of PC or whether it is not a part of PC. Whenever contingent payment is to the employee shareholders, so it will not be a part of PC. It will not be a part of PC if it can be forfeited if employee terminate. But it is not given the question whether it will be forfeited if employee terminate. That is not given the question. Means you take two assumption. Two assumption means what? Two assumption that it has been classified as contingent consideration or it has been classified as payment of remuneration. Correct now. It is not a contingent consideration. Correct. So in both cases, but the fair value of consideration paid, fair value of PC is equal to what? 900 means fair value of consideration paid is 900 and fair value of contingent consideration. In this case, it will be included how much? 200. This will be nil. So this will be 1100. This will be 900 and fair value of INA is given how much? It is how much? 850 and 850. So in this case you can see goodwill is equal to how much? It is 1100 minus 850 is equal to 250 and in this case it is 50. Goodwill is 50. Understood? Now they have said what is the impact on financial position? So over the next 3 years the cumulative earning. The cumulative earning is given how much? 1050. So in this case, just when it is contingent consideration, you can see it was recognized at 200, but actual payment is 500. If it is a financial liability, so can I say the actual payment will be considered as the difference will be considered loss. So 300 will be recognized, and the profit after payment of additional payment means additional payment when it is paid. So this loss will be recognized. So 1050 minus 300. So this will be 750. But in this case, 500 will be recognized as an expense, remuneration expense. The profit will be 1050 minus what? 500. That is equal to 550. Have you understood this point? Good question. I will say this is a new question not given in ICAI study material before this. But we have covered this type of concept. Correct now. But of course, we have not taken this type of questions in class. But it's common sense point. When it is considered a contingent consideration, then what will be done? When it is not a contingent consideration, then what will be done? Have you understood this point? Good question, I will say. Good question. Have you understood this point? Bata. Yes, sir. Let's see what the answer has been given. You can see remuneration, contingent consideration. The goodwill is 50 to 50. Then cumulative earning 1050, 1050. In this 500 is deducted, in 300 deducted, 550 and 750. Got it? Yes, sir. Coming to the next question. This will be our last question for today. Then balance 10 question we'll do tomorrow. Chalega? Yes, sir. Question 10. X Limited acquired B Limited exclusively with a view to sale and it meets the criteria to be classified as discontinued operation. Oh, X Limited acquired B Limited exclusively with a view to sale means B Limited is acquired exclusively with a view to sale and meet the criteria to be classified as discontinued operation. Means it is now classified as discontinued operation as per Ind AS 105. Now can I say discontinued operation means it is a component of entity? Correct? Means it is a group of assets and liability which is held for sale. Whenever it is held for sale, so it will be also classified as disposal group held for sale. Correct? Means measurement of disposal group held for sale will be done as per Ind AS 105. Ind AS 105 says that it will be measured at carrying amount of fair value less cost of disposal. Understood? But can I say it is a newly acquired uh, group of asset? So if a newly acquired group of asset, in that case carrying amount will be the initial cost only. Therefore, it will be initially measured at lower of cost and fair value less cost of disposal. I hope you are understanding. Further following information is available about B Limited. Fair value of total asset excluding liability on acquisition is 360. Cost to sale on acquisition on reporting date is 10. Fair value of liability on acquisition reporting date is 80. Correct. Means on acquisition reporting date means what they are saying on the date of acquisition and on reporting date. What is the fair value of assets? It is 360. Liability is 80. On reporting date also liability is 80. The fair value total asset excluding liability on reporting date is 340. And cost to sale is 1010. Correct? Means can I say it will be initially recognized at 360 minus 80 minus 10 means 270 and subsequently recognized at 340 minus 80 minus 10 that is 250 and the difference 10 will be recognized in PL, 20 will be recognized in PL as an expense. Understood? Very simple, nothing complication in this. How discontinued operation pertaining to B Limited should be measured in consolidated financial statement X Limited on acquisition date and reporting date. So measurement already I have said. Now it will be reported in the consolidated financial statement as a separate item. Correct? Now as a separate item means the the profit and loss from discontinued operation will be separately disclosed in a statement of PL and it will be separately disclosed in the balance sheet at the disposal group classified as held for sale separately from non-current asset and current asset, non-current liability and current liability. Understood? So that is the information. I hope you have understood. Let's see what the answer is given. Let's see what the answer is given. Ind AS 105 defined disposal group as a group of assets to be disposed of by sale together as a group in a single transaction. The group include goodwill. This I don't think you should write down. In the given case, B Limited is acquired exclusively with a view to sale and meet the criteria to be classified as discontinued operation. Discontinued operation would be measured in accordance with the paragraph 15 and 16 of Ind AS 105. Means you can say it will measure as per Ind AS 105. As per Ind AS 105, entities shall measure a non-current asset or disposal group classified as held for sale at a lower of its carrying amount and fair value is cost to sale. However, if a newly acquired asset meet the criteria to be classified as held for sale, then it will be measured on initial recognition at lower of its carrying amount had it not been so classified. For example, cost and fair value less cost to sale. Therefore, on acquisition date, it will be measured as a disposal group at fair value less cost to sale, which will be calculated at fair value of total asset excluding liability on acquisition and cost to sale. That is 350 and liability is 80. Therefore, it becomes 350 minus 80. Correct now. fair will, then on reporting date also same thing they have given, check kar lo. At reporting date X Limited shall present the assets and liabilities separately from other assets and liability in its CFS, that only I have said. In the statement of PL, X Limited shall recognize the loss on subsequent measurement net of asset of fair value which equal to 270 minus 250, that is 20. That only I have said. But you can see how to write, means are you writing as per the requirement of ICAI, means you write on by reference of India's. Reference of India's is more important. Correct now, means if you need to write on as per India's 105, the definition of disclosure group, then the measurement requirement on reporting date and subsequent date, and the difference will be transferred to PL. This much if you can write on, you will get marks. Correct now, understood. I hope up from 1 to 10, whatever question we have done, it was very simple, no complication. Up to this, any doubt? So can we take balance question tomorrow? Because okay, because we have done almost 1.5 hour. Correct? The balance question can we do tomorrow? What do you think? Yes, sir. So balance question we'll do tomorrow. Chalega? Bolo. Till now, whatever we have done, any doubt in that? So tomorrow is festival. So tomorrow, whether you have holiday, so we can start tomorrow at 11 or 10:30 also. Correct. I was not knowing that tomorrow is holiday. Then I was informed that yes, tomorrow is holiday. So we can start early also because you will not go to office. Of course, you are at leave period only right now, but you have certain plan. I don't want to disturb your plan right now. Correct. Now, normally I have seen that in 5:30 you will be free. So I have taken a time of 5:30 so that you can come on live class. Correct? Yes, sir. चलेगा बोलो. Okay. Tomorrow what we'll do? We'll take at 11 only. Okay. Tomorrow we'll take at 11. चलेगा? Because tomorrow is holiday. Yes, sir. So for today, this much only. Thank you very much. We'll meet tomorrow. Keep revising, keep studying, correct, and become CA as soon as possible. Okay. Any more question if you want to discuss in the class, so you can give me the question number. I will discuss that question in what in this live session. So if you have some question which need to be discussed in live session, you can give me that question number with the page number of IC study material so that I can find out that question before starting the class. Chalega. Thank you very much. We'll meet tomorrow. Till then, bye bye. Take care. Enjoy your remaining day. Bye bye.